Lastly, we've got our tax summary forms. We should be right on time to finish at 12:30 as expected. So I've given these in the course handouts if you want to download them. The T1s are the actual Schedule 32. Schedule 32 is one of the only forms that I'm aware of that has two names, T661 and Schedule 30. T661 is the old name before they renumbered it several years ago. And they still use those two names interchangeably because they refer to some of the older forms. So Schedule 32 is actually the proper name, but you'll still see T661 used all the time, pretty much synonymous. So that's to record your expenses for both deduction and what's qualified for tax credit. There's another schedule called 31 that then calculates, are you a 35%er or 15%er or what rates do we get, and calculates the actual ITCs. Both of these have to be filed complete in prescribed form, they call it, with all information within an 18-month deadline. So if you're missing either of those forms, you lost the whole claim. Okay? Clients have filed the one and forgot this one, they lose everything. Okay? We show you how to reconcile the taxable income of Schedule 1, how to deal with non-arm's length expenses and different Ontario credits, as well as the Ontario University credit. Okay, a quick example of how the expenses would work here. So in this hypothetical scenario of current expenses, we had $400,000 in wages, $25,000 in materials, $45,000 in contractors, and $50,000 to an Ontario university. So $520,000 of direct expenditures. The proxy election would be roughly 60% of the $400,000 for the year in question. Okay. In this case, we transferred non-arm's length expenses of $10,000, okay, to come down to our qualified expenses of $743,000. We then calculate our provincial credits. So our Ontario credits, the OITC, then that reduces our base for the ORDTC, the 4.5% credit. Then in this case, we also get a 20% credit on the $50,000 we paid to the university. Okay. All of those then come off, the 74, the 30, and the 10, are qualified federal expenses for our net qualified federal expenses, which then come down to 35%. So basically on that 520 of direct expenses, we get $335,000. Okay? That's because of the proxy and gross up there. And we got to pay tax on those credits. So it depends if we're a small company or a large company. We pay tax on provincial credits usually the year they're earned, most of it, and then the federal credits the year after they're used.